live, I believe. Hi, Dolapo.
Hi, Salani.
Hi, so great to have you here. Thank you for making the time to come and speak with us and our community at Halisi Consults on securing venture capital funding as an African startup. First of all, just as a brief introduction, I'm just going to go over your background. So, if you could just tell us who you are and how you got started in VC and what's your goal surrounding helping startups secure funding.
Great, no, great question. Glad to be here today. So a little bit about my maybe professional background. I spent most of my career in management consulting. So started off at Accenture and then eventually moved to Bain, worked across different African markets, and then moved to the Middle East for 3 years. Um, and I got a bit bored and decided that I wanted to be able to use some of those skills that I learned to be able to support startups in the tech ecosystem. I think it's such an evolving space, and I believe Africa is the next frontier market. So when you think about like the way technology is developing significantly in the West, it would eventually kind of trickle down to
Yeah.
Africa, and it's just something I'm always been excited to be a part of. Funny enough, I did my like final year dissertation in university on the tech ecosystem in Nigeria. So it was almost a full circle moment to be able to come back and support startups in the ecosystem. And yeah, that's what I'm doing. I'm super, passionate about it despite the current market conditions. I do think there's so much opportunity to disrupt so many like traditional spaces and to be able to serve a lot of customers that don't necessarily have access to certain services, whether it's like financial services, etc. In terms of what I'm particularly excited about within the VC space, I think one major thing is being able to support founders at their earliest stages. So, being able to provide hands on support to them, and particularly also women founders who have been grossly underserved despite the high potential that we have. Yeah, that's a bit about that.
Amazing, amazing, amazing. Well done. That's a interesting transition from management consulting into VC and bridging that gap because management consulting you deal with like higher level corporates as opposed to VC world where you're dealing with early stage startups that are literally maybe like a three-man team and all of that. How do you manage that sort of like transition?
So a bit about the transition. It's funny enough, there are actually a lot of transferable skills from consulting that apply to VC, right? So you do a lot of market studies, you do market sizing, being able to validate the opportunity within a market. And in consulting, you do quite a bit of that as well. You do also within Bain, I supported the private equity practice. So I had some experience doing due diligence, which you do a lot of in the VC stage as well. Although, like, the level of data that these companies might have is a lot more limited, but you're able to still do it on a smaller scale. And to me, slightly more impactful scale because you're taking companies from like 0 to like 5. Whilst
Yeah.
with consulting, a lot of these companies are like like they're multinationals. They are like large government agencies, and so it's for me it was a very good place to learn the skill set, especially because I was working with larger teams. I was having kind of exposure across different markets and being able to then transfer that. But I'm still learning. I'm constantly learning. I don't know everything in the venture capital space yet. But because it's such a nascent industry that's evolving, I
Yes.
think the latest stage VC fund hasn't been in existence for that long as well. So it's,
Yeah.
it's, it's an industry that you can learn through like an apprenticeship model where you kind of work under a partner that knows a lot and you learn, and from there you kind of get into the ropes of things. So that has been my experience.
Amazing, amazing, and well done on being able to transition successfully into VC. So my next question is about you being a VC. So as a venture capitalist, what do VCs typically look for in African startups before considering an investment, and how can founders position themselves to meet these expectations?
Yeah. So I think I always like to start with the fact that venture capital funding is not for every type of startup. it's for the 1% of the 1%, right?
Mm.
Even when you think about it in developed markets. So I think oftentimes some founders try and raise money from VCs and get no's and get disappointed, but it's just not the right type of funding for you. So even understanding, is this suitable to the current business that I'm building, is a very critical factor, because venture capital is meant to invest in companies that can be $1 billion companies, or even $500, 500 million, dollars. And in Africa, that's not very easy to build, right? So when
Yeah.
you just think about what VCs are looking for, which is high growth, high scalable, versus just the fact that not many businesses in Africa can reach that kind of revenue numbers today, it's important to first of all understand if VC is the right fit for your business model. It traditionally existed to support scalable business. So when you think about, software businesses, the likes of WhatsApp, the likes of, Paystack, where the cost of, serving a new customer is very low. So your customer acquisition cost needs to be low, and you need to also have sticky customers. So those are the type of business models that typically VCs will look for. So in terms of when I'm looking at a deal, looking at a deck, or having a conversation with a founder, I think few things I look out for is the market opportunity big enough? So can you reach that scale that I mentioned?
Mm.
Number two is the solution that you're building, is it suitable for the market that exists today? So if you're serving Africa, you need to think about the fact that like the development in Africa is not the same as the development in the West. So if you're trying to build something that's super high tech, and knowing that Africans don't have the ability to, they're not used to doing that, right? You don't want to completely transform the way they're already interacting with the product. So just thinking around the solution, I think another key thing is the team. So are you the right team to win in this space? What experience does your management team have to be the best type of founder in the space? Because we're supporting the best of the best of the best. So if you don't maybe have that necessary experience, you can also hire the right management team that can support you, because we look at team from a management angle, right? So the top four execs, even if it's not just you with that experience. So not also being too afraid to build a team that's, relatively senior, that can support you in kind of marketing you the best way. I think another thing is around the traction that you've raised. So
Mm.
although we do early stage, we want to see a bit of traction. So we want to see that maybe there's an MVP, so there's a minimum viable product that you've tested with your users. We want to see how you're doing from a revenue standpoint, how fast you're growing, right? Because at the end of the day, VC is money. We have to return that money to other investors. So I'm not just investing because I like you. I believe in you as a person. I need to think about how can I return that $1 million that we've invested in you over time. So those are some of the key, I think, considerations. And lastly, maybe just the competitive landscape. So if you're trying to win in a market like, I don't know, a piggy vest existing, like what are you doing differently, and why would you win over, why would customers choose you over another solution?
Thank you so much for that. We always get to speak to founders that sometimes even have traction, but their industry is so competitive that they don't even go past the stage of having just one meeting with a VC, and it can be disheartening. But there's so many metrics and benchmark that obviously you as a VC will be looking at before you make that investment. The main thing always is that to be able to return the investment to your own LPs as well. So yeah, that's amazing. Thank you so much for that answer. It was so concise. Yeah. So my next question is about how African entrepreneurs struggle. So founders in Africa typically struggle with VC funding. What are the common mistakes that you see in the fundraising process, and how can they circumvent these problems or these mistakes based on what VCs expect or you as a VC expect?
Now, that's a very good question. I would say a few things. So one is around your due diligence process and making it easy for the investor to do due diligence on you. So usually when we have that initial call, maybe we go to the next stage of the process. The next stage is to move into a form of diligence, right? And we need your data room to be ready. We need to be able to look at your historical financials. We need to see that, because oftentimes I think a normal thing that happens in startups, when you start, you use your personal funding, right, to start your business oftentimes, right? And just ensuring that your books are in order. So even if you start off that way, the next, as soon as you can, start to have your finances in order, the right bookkeeping in place, right? Because one part of financial diligence is going through your bank statements. Some investors do that, going through your bank statements and checking that it matches with your historical financials. And when there's a tally and there's, I don't know, $5,000 sent to a school or something, it then may not necessarily match what you have in your historical. So just ensuring your data room, which includes all your statements, all your HR documents, all your legal documents, are in check to be able to make a viable investment. I think that's one critical thing. I think, like you said, the competitive landscape is such an important factor, like, because we're trying to back the number one or number two or number three player in the market, right? We're not trying to back the number 10 player. We can't win because it's all about outsized returns, right? And a lot of industries, right? When you even think about, let's say if we take the UK, for example, where you are, when you think about the food delivery companies, they're like three major players, right?
Yeah.
Or four, right? And so Deliveroo, Uber Eats, I don't know. Yeah, they're not that
Just
many.
yeah.
Yeah, Just Eat, right? So they're just not that many. And so as a
Mhm.
VC, you want to back the category leader. So I think being very reflective of your journey as an entrepreneur, like how you start doesn't have to be how you end. So not necessarily being stringent about your approach, but being dynamic about speaking to people, speaking to even investors before you start raising money, speaking to veterans in the industry to understand how to position yourself to be differentiated in the markets, right? Especially where it's a crowded market. So even though you have some form of traction, as I'm analyzing it, to me, it seems like there might be traction that might cap at a certain point. So you may be able to get from 0 to 1, but to get from 1 to 100 is a different level of competitiveness that's required. And so just being dynamic in your approach and flexible in your approach, or tweaking your business model as you scale, right? So learning from users, getting feedback from users, being very, very flexible. Like I did due diligence on a company over the last 3 weeks, and how they started is so different from who they are today. But that's because the founders were not hell bent on sticking to a particular way of doing things. So they started with an MVP, and they eventually tweaked it based on what the users want. So like, it's what the users want. Like your product needs to be a market pull, is kind of how I like to say it. So people are literally demanding for it and pulling for it rather than you pushing and forcing other people to consume your product. Because we want something that's very sticky. People
Yeah.
are going to stay in your product, people are going to stay using your product, and people naturally gravitate towards using it.
I absolutely agree 100% with the stickiness of the product. Um, I think founders need to build that into the product itself. That in a way that, okay, if I'm onboarding users this way, what can we offer to users that will make them stay for the long term? I'll give an example of a product that one of the founders that we worked with built. It was an HR solution where on the front end they were charging like very minimal fees to onboard employees through employers. I think it was 100 naira per month. But on the back end, on the other side of the product, they were offering payday loans to the employees, which makes it really sticky that even if you onboard even if an employer onboards an employee, the employee making use of that payday loan, even if they leave that company, would want to carry on using those payday loans. Will now even say, okay, new company, I'm here now, but my former company were using this solution. So you guys should use it so we can have access to this product. So that's an example of product stickiness that I've heard of before. I'm sure you've heard of something
Build
similar.
it in. Yeah, I
Yeah,
agree.
it's just so like it just makes users stay whenever they sign up. And yeah, and the point you made initially about due diligence, having all your docs done and your data room set up. This is what we always preach here at Halisi. All your documents need to be done because it just saves you and the investor a world of headaches. Like
You
just
don't want
have
to
a
raise any red flags. There are not actually red flags, but it's just because things were not in order, right?
thank you. It's the simplest thing you can do even before you start having that conversation with investors. Or like you said, investors, you can even reach out to investors and start having that conversation before you launch your MVP or before
Exactly.
you go live.
Yeah.
Yeah, thank you so much for sharing that, because it's something that I personally always, I'm always like a bit dicey about it. That wouldn't it be too early to speak to investors before the product goes live or after? So to speak to investors, have like um
Initial conversation, because before you
exactly.
invest a lot of capital into your business, right? You're investing, a lot of people, you're investing your life savings at the beginning stage, right? And before you do that, why don't you check that the market needs it, right?
Mm,
And I think the two people that will probably know best are maybe the people that have already existed ahead of you, that have a sense of the competitive landscape, but also investors that have expertise in that segment, because in a year probably review thousands of pitch decks, so you have an idea of where the gaps and the opportunities lie in the market. So yeah.
yes, thank you so much for that. So I think that leads me to my next question in terms of building relationship with investors. We know that building a relationship with investors is crucial. What advice can you give on how founders should approach building relationships with VCs, and how can they do that effectively from a VC's perspective?
That's a good question, because obviously there are limited investors and there's so many founders. I think if you can get a warm intro, that's always helpful. So if you can get someone to introduce you to somebody that they already know, I think a lot of, I go to a lot of events, and I go to a lot of events to meet founders. That's actually my intention. So just being a bit memorable, I think, at those events, so that one actually can remember you and also be driven to stick in touch. But honestly, money speaks. So if I see that you're actually doing well and you're having traction, I want to watch you till you're ready to be
Mm,
investable by my fund,
mm,
because I win by investing in the best startups. So it's
yeah.
also in my interest to know founders and to build relationship with founders, which I do. But I want to build with founders that I know that like their product is doing well. There's a market pool. You're the next big thing, right?
Yeah.
And so just having, I think, always focusing on traction and showing that like your business actually works and is viable and it's what people need. People will gravitate to you. Like investors will even reach out to you. So yeah.
Amazing. Thank you so much. One of the things that I think founders struggle with is getting those warm intros. As
Yeah.
much as, one may have a network, or, you reach out to a scout or people that do warm intros to investors, there's only so much that people can do. In your opinion, what's the best approach when you don't have that network to
Yeah.
get the warm intros that you need? I
Yeah.
know that,
Social media.
yeah,
Social
really.
media. Yes, social media. Like a lot of VCs are on Twitter. Like
Mm,
a lot of VCs are on Twitter. And I've gotten screenshots of tweets sent into our investor group chat, like, oh, this company is doing something interesting, right? So also not being afraid to build a public profile if you can,
mhm,
because that would also make us watch you, right? I'm like, okay, this company is doing well. They have a lot of positive reviews about them. People are raving about them, but it still ultimately comes to the fact that people need what it is that you are doing. That's when people review you. So it still ultimately comes down to building the business first and showing some form of traction in the beginning phases, um, to be able to kind of get the eyes of that. I think another thing is that events as well, like I said, going up to speak to people,
mm,
being at those events in Lagos. I think there's like one event a week, probably, or more,
mm.
right?
Yeah,
So there are always opportunities to go. So not being afraid to kind of put yourself out there to, speak to them, at that stage. Yeah.
amazing. Thank you so much for that. That leads me to my next question. So now you've approached the VC, or you have a sort of warm relationship with the VC, and you've got some tractions. Your documents are properly done in your data room. How should startups then pitch, or rather, what should startups focus on when crafting their pitch to stand out to VCs, especially like in a competitive market like Africa?
Yeah. And when you say pitch, do you mean the pitch deck or the pitch call conversation, or both?
Everything that concerns the pitch.
Okay. So for your pitch deck, I think there's so many. Like, thank God for AI. Honestly, I was just raving about how I found a way to do a task in like a significant amount of time with one of my colleagues, just about an hour ago. And so AI tools, there's like pitch.com. There's so many AI tools that enable you be able to build a pitch deck if you don't have, let's say, capital to reach out to a consultant to support you in building out your pitch deck, or just building out a concise pitch deck. Like a lot of unicorns out there have posted what their pitch deck looks like, right? So just getting those templates, working through it, ensuring that your pitch deck is aligned to kind of industry standard. I think
Yes.
if you want, like, I think that doesn't require that much effort, to be honest. I feel like that's the minimum one should be able to do in this kind of economy that there's so many resources out there to enable that. On your pitch, I think two things I find very compelling is when I actually like when startups start with like how they've their traction, because that already just makes me like be like, oh, this is interesting, right? So whether you're pitching by even message or by LinkedIn or whatever, starting with we've done X and Y, like people gravitate to numbers, like I've been honing on, but also just practicing like your speech, so being concise. I really like when, and I will usually even ask when I have an investor a pitch call, is like, please walk me through your deck, because a lot of the times, I'm looking at a lot of decks that same day, and
Mm-hmm.
so I need to be able to pay attention to what you're saying. But if I can see it on a screen, that makes me also be able to follow. So practicing with people that don't know anything about what you're building, to understand if they get it. Because a lot of the times, sometimes I get on some pitch calls and I'm like, actually, no, take a step back. Like, don't assume I know anything about your industry and speak to me like you're speaking to a 10-year-old, because a lot of VCs are generalists. So you may have expertise in fintech, you won't have in health tech. You may have in logistics, you may not have in you know, um, consumer. So just speaking to investors also, like they don't necessarily have the expertise that you assume that they may have. So being able to say it in a very concise manner, answering questions, prepping, like you literally would do for an interview, would be my advice to them. Yeah.
Amazing. I think that a lot of founders sometimes have this knowledge bias because you are dealing with the product, you're living with your business every day. So you're assuming that everyone understands what you're saying, but then you're speaking about the product or the business at a really high level that someone that just encountering it for the first time is like, what is he saying? And yeah, so like I like that approach of having the founder walk you through the pitch deck. Yeah, amazing. So speaking about financials, so financial performance is obviously a major consideration for VCs. What financial metrics or projections, if you may, are most important to you in the decision making process, and how should founders present these financials in a way that appeals to VCs?
Okay. Okay, so what are important? Everything is important, but if I were to hone in on a few metrics, I think one is just around your margin, so your gross margins, because traditionally a lot of startups that get VC money, they don't need to be profitable necessarily from day one.
Yeah.
But in this current climate, people are actually focused on that path to profitability. So even if you're not profitable now, at what point do you become profitable, and what's the roadmap to getting profitable, and are your assumptions like realistic enough to be achieved to get to profitability in 4 years or something? This is for example. So
Mm.
not necessarily just your net profitability, but also your gross profitability, just seeing how much of that you make relative to kind of comparables and industry benchmarks. I think another one is like your customer, your acquisition costs. Because like I said, you want to keep your acquisition costs as low as possible, especially relative to your lifetime value of your customer. Meaning, like I said, and using, maybe global examples like a WhatsApp. Once WhatsApp has acquired me, to be honest, they're like I'm sticky. The lifetime value of me using their product is probably endless. I probably wouldn't leave
Mm.
until, I don't know, there's a new software or whatever, or even Instagram, for example, right? So the lifetime value of the customer is long. And when you compare it to the customer acquisition cost, it's like relative. So there are standards of like, 3 to 1 in terms of the CAC to like LTV ratio. That is something that people would typically kind of look at. Another one is your growth rate. Like you said, we're really, really trying to invest in high growth companies because a fund's life is 10 years, meaning we need to kind of return the money of the fund in 10 years' time at the maximum, ideally, right? With profits attached. So we just want to see that you're growing in a very in a fast way. So, for example, let's say like someone is building a fashion house. VC money is probably not best for you because fashion houses take hundreds of years to really build a super high growth. And I'm not saying like exclusively, but typically, right? They take a while to be able to build that sticky customer. So just being able to build to create a business that's kind of growing significantly fast is like a super critical thing. And then your high level like top line revenue numbers, like it needs to be large,
Mm.
generous, because that also impacts your valuation because usually valuations are a function of your revenue. So let's say a business is raising, I don't know, at a 10 million,
500K. Ooh.
10 million. No, 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 no. Valuation. So I'm talking about valuation. At a
Okay.
10 million post money valuation, right?
Okay.
In the current market today, or maybe last year, 10x was like the standard metric, meaning your revenues need to be about 1 million to generate a $10 million valuation, right? For like
Mhm.
early stage VC. So that's 10x of your revenue. So your top line really also influences what valuation you can raise money at, as
Yeah.
well as then the total amount of size you can raise as well. So yeah, that's a metric.
That's very, very useful. I said it recently, I think in one of the videos I shared on our page, that you raising money from investors, whether it's debt financing or is equity funding, which is VC, or private equity, it's about giving value back to the shareholder.
Yeah,
Investors are human beings as well. They're not just an ATM that just pours out money. They're not your glucose guardian. So
yeah.
you need to get their ROI. You need to be able to either 10x their investment or 20x their investment. And if it's debt finance, you need to be able to give a sizable return back on the investment made into your business. So thank you so much for saying that again and clarifying that for us. Yeah. So I think that takes me to the next question. When it comes to, because you mentioned valuation, I think just that's a great segue into negotiating terms with investors. Now, negotiating terms with investors we know can be tricky. I personally, at Halisi, we've secured funding for people, and the deal did not go through because the terms were not favorable, and we just could not get everyone on the table to agree to something that made sense. So the deal fell apart. So what advice can you typically give to founders on how to negotiate and get favorable terms while maintaining a positive relationship with everyone involved?
Yeah, that's when things get serious when you think about negotiation. So I think investors are solving for something. So and you are solving for something. So really trying to understand what it is that they are solving for, right? So usually there's governance kind of involved in that as a key element of that, and just I think there's no one size fits all because there are just so many terms to be able to go through for us to go through. But I think just generally being flexible on both sides is usually required, right? So even investors, like if I see the next best thing, of course I want you to be one of my portfolio companies.
Mhm.
Um, and so I'm also kind of flexible. So what I start with might not necessarily be the final outcome, but there are some things I'm like, I 100% need or I like 90% need. So understanding, okay, what does my investor absolutely need? Is it a board seat because they're putting in, I don't know, $1 million, which might be their largest ticket size. So they need to ensure that it's being used the right way. Um, but maybe they're not so strict on other terms. So I think usually with negotiations, it actually doesn't need to go wrong at all. I think it's just each party understanding what is what does this person prioritize, and what does the other person prioritize, and trying to find a sensible like middle ground, where you're flexible with it or versus not. Yeah. And the thing is, with a lot of VC money that's being raised in Africa, they're very standard term sheets that are used. And usually there's like the Y combination template of safes that are typically used. So understanding kind of what each of those lines or terms mean, and just being flexible, like, and speaking to other founders, like, oh, okay, was this something that, is this something that has impacted you? So if you're more advanced, right, let's say you're a Series B startup, getting advice from them if you're at a pre-seed stage, like, okay, what is it that you think I should optimize in this phase? If you don't trust investors, which I understand, right, to give you the best answer, reach out to founders at later stages to get their feedback. Yeah.
Always a good call to reach out to founders that are also in your space as well, and founders that have gone through the experience that you have.
Yeah.
They are always the best people to give feedback, and they always give honest feedback. Thank you so much for that. So now I'm going to divert into scalability, because your startup being scalable is most probably the most important thing that a VC needs to see. They need to see that you have huge growth potential, like you've been mentioning on this webinar. So scalability is often a concern for African startups, because there's only much you can grow. Because first of all, there's so many how do I say, the competition is a lot, and the market, the size, what I think called share of wallet is quite limited. We're all targeting the same middle class customers, whether we like it or not. So in terms of scalability, what qualities do VCs look for to ensure a startup can scale successfully? And what strategies should entrepreneurs use to demonstrate their growth potential?
And that's a very good question. In terms of scalability, I think what you said is very valid. The share of wallets and just the disposable income is not that high for a lot of Africans that take up the bulk of the population. And I think ultimately it comes down to building a business that addresses a need, right? So VC money isn't going to startups that are providing a want for customers. They're going to startups that they're providing a need. So your customers literally need your product. So what you're hampering on is not really the need, but just how are you better than other players? I don't know if you get what I mean, right? So focusing on how am I better than other players, rather than thinking about, is this even a want or a need? You shouldn't be trying to raise VC money if you're doing something that customers may want. So I think that's the first thing, because if people need it, then surely it will eventually kind of be scalable if you're providing it in a maybe cheaper way, a more efficient way, and you're able to kind of get to the customer. You're able to market your product, whether it's business to businesses or to and like B2C customers.
Yeah.
So I would say that's kind of how we think about scalability. And even with my fund that I work with, we like to back, we call it, our thesis is called Market Creating Innovation for Non-Consumption, meaning that we're trying to back entrepreneurs building businesses that are either serving customers that haven't been served before, or they've been served in a way that hasn't been efficient. And when you think about those two things, that's non-consumption. So you're not serving people that already use this service. You're trying to serve people that already don't have access to those services in an efficient or in a cheap manner, or maybe not cheap, but in an affordable manner. And so just thinking around scalability, usually if you're serving in that space, your product will tend to be a little bit more scalable, right? So when it's asset light, the cost of acquiring. So going back to some of those metrics, the cost of acquiring a new customer is cheap. Your technology is not too necessarily too advanced, but something that customers can already interact with, right? So if you're trying to build an app that that it's something that people just don't want an additional app on their phone for no
Yeah.
reason, right? So just thinking about like yourself as the customer as well, or trying out with businesses as the customers to see if it's something that they would easily download or they will easily use for X and Y reasons. Usually, you will kind of be able to gain scalability. In terms of showing that and proving that to investors, you could think like wait lists. So if you have like a large wait list, that shows okay that people are significantly demanding for your products. If you've shown historical like strong growth month on month, it also
Mm.
shows that okay, there's like a roadmap to kind of building scale. The market size at the end of the day, so the overall like pie that you can serve, shows that okay, if you do everything right, you can capture 5% of the pie, and that 5% is still a very high, value and high number. Then it shows that okay, you are scalable to a large degree. If you do your market sizing and your market is, I don't know, $100 million market or small, you already know that that's not for VC money, because if your market is $100 million market, you can't get 100% of the market
Of
really.
course.
So it already shows you that the market is small. So thinking about it that way.
Very interesting concept. I really like that. I think at this point, I want to hear more about. We do have a question, so let's just quickly answer that. But I want to hear about what your thesis is as a VC, just to share with our community. So we have a question from Yemisi Bodethorpe, and she says, "Are older founders ever willing to share useful information?" Um, Very interesting question.
Yeah, yeah.
I think it depends on the relationship that you
Yeah,
have.
thanks for the question. Yeah, exactly. I think people, it's like mentorship relationships. Like, you don't just want to take. You also want to be able to give. So I feel like when people see there's a mutually beneficial relationship, also
Mhm.
maybe you're not directly kind of competing with them, you've built the relationship over time. I think over time you're able to. They may not give you their secrets, Pepsi or Coca-Cola recipe, but being able to, see you as more of an ally, rather than a competitor. So, more of a colleague or, a fellow kind of player within this space, I think is the key thing to do when you're trying to build that relationship. Yeah.
Yeah, you being able to add value to them, not just take from them, is probably the most important thing.
Yeah.
Because a lot of founders just roll up to you and say, "I want this, I need that," and great on you being audacious, but why would I
Yeah,
do that?
they're also very busy people. So considering people's time,
Yeah,
and also like no direct competitor is necessarily going to give you their advice. So being also practical with the founders that you're going to reach out to, like if you need term sheet advice, the founder does not need to be in your industry. It can be any founder because
yeah,
it's the same term sheet that is being agreed amongst a lot of early stage African VCs and founders. So, yeah.
yeah. But always good to have sounding board just to make sure that you're on the right track and that you are not making a mistake,
Yeah.
obviously. So yeah, let's back to the issue. So what is your current investment thesis for you as a VC?
Yeah. Yeah. So I think I started on it around market creating innovation. So like I said, where I'm just reading the questions. Yeah, we can share that
Okay,
after.
so just to answer the question again, Yemisi. Thank you for the apt response. Can you share some of the events where one can effectively network? Um,
Yeah.
there are tons of events every week in Lagos. I think there's for example on
Like
Friday there's We Tech. I
yeah,
don't
there's tech on Friday, which is for female founders.
sorry
There's
Saturday.
Yes, on Saturday, sorry. On Friday, there's like a Africa FinTech Foundry event, which I'm speaking about. Sorry, on like next week there is catalyzing conversations by Endeavor.
Yeah.
Following week there's Tech Moonshots by Tech Cabal. So trust me, there are events happening every week. I don't think there's a one place to find. You're just following the right people. So following the media like Tech Cabal, for Tech Point, TechCrunch, following them, they tweet about events, following, VCs that you follow as well. They always speak at these events. Just following the right pages on LinkedIn and Twitter and Instagram, you'll definitely get a hold of what events are going on.
Yeah, just you stay aware yourself and put yourself in a position that these opportunities, when they come up to network at this event, you see them on a regular basis. So yes, back to the matter again.
Sure.
Your investment thesis. I actually wrote down what you said about market creating innovation for non-consumption.
Yeah, for non-consumption. Yeah. Yeah.
Okay.
So non-consumption, I'll start with that because it seems like a little bit of a mouthful. For non-consumption are customers that are not consuming that product already, basically. So they're not consuming it, or they're not consuming it in an affordable or in a cheap way. And so you're trying to enable them to consume it because you're doing something more efficiently, or you're making it easier for them to access that particular product or service. So that's really our thesis. In terms of like spaces I'm quite interested in personally, I really like, businesses building an infrastructure play. So an infrastructure layer that, a lot of our portfolio companies can rely on is something
Mm,
that excites me. So when I think about like cybersecurity, so anti-monetary, AML solutions where there's protection and prevention being done, is very exciting to me because that business can serve almost all tech companies, right? So that market size is significantly large, and two, it's something that people need, right? So because a lot of these, like let's say we take fintech, like for example, the type of checks they do are usually like identity verification checks, which is like your biometrics when you do it. But over time, they need to follow the transaction that's being done on their platform. So they need AML solutions that are tracking and preventing fraud. So those are kind of some of the, current interests of mine. I would say the creator economy is also super interesting because a lot of when you think about just the behavior of a lot of millennials or young people in Africa, it's like because the economy isn't doing necessarily as well, people are looking for other ways to make money. And the easiest way to make money is actually being a creator because you have Instagram, you have a phone, you have a tripod, you can create
mm,
content and become a creator. So
yeah.
it's like, and when you think about the fact that the population of Africa is very youthful. So, how can we serve these youth better? So, how can these creators leverage whatever tool it is that I'm creating for them? It's something that's exciting to me as well. So, there's like a company called Seller that enables freelancers generate income in like multiple currencies. It's like an interesting company. So, things that like that innovating around like current market trends
Yes.
are exciting. So you see like fraud, there's always an announcement of fraud rates going up in Africa, right? So who is building around that? You can see people are generating income from being a creator who is building around that. So almost following kind of like market trends, I think is also a good way to see where opportunities may lie today or in the next 5 years.
Amazing. So I'm going to take that as you are essentially industry agnostic and you're just
Yes,
looking
we
for the
are.
next trend, the next, wave, and you want to be early on that. That's
Yeah.
really useful, like you being sector agnostic, because there's opportunity everywhere.
Exactly.
And, because you're restricted to one sector, you now miss out on the next unicorn.
Exactly. So we're industry agnostic, yeah.
Okay, just again from here, Missy. She said she would like to follow you, that you should drop your handle. And
Okay.
I appreciate I hope we have the right handle. I think it's at Dolly, three L's or two L's.
I'm not sure. I think it's three L's and two Y's. But I think LinkedIn as well is a good I do more professional kind of sharing there
Okay.
too. So Dolapo Morgan as well on LinkedIn or my
Dolapo
Instagram.
Morgan on LinkedIn. All right. I like that the community is engaged today because they've seen investors. Everybody's eye sharp. Wow. But yeah, thank you so much for sharing your time with us and sharing your knowledge with us. We actually will be in touch because we have some founders that align with your
Our
thesis and where
thesis.
the direction you're taking the fund to now. I don't know if there's any question. I think there's one from Kingsley. He joined late, so should we answer his question? Yeah, they have joined late, but please confirm if this includes investors and founders in areas other than tech organizations. So we get a lot of this.
Mm,
And this is something that
no
I keep telling
problem.
people in my my circle, um, that there's way more SMEs than startups. Obviously, that goes without saying, and there's way more need for funding within those SMEs. So I mean, in your experience and your perspective, honestly, as a consultant, doing investor readiness, helping businesses with fundraising is really hard to raise for SMEs now. CBN rates are It's really tight. So what insights can you share in that area, or is that something that you prefer not to, discuss?
Yeah, no. So I honestly I understand the pain of that. People always ask why are there so many VC funds focused on tech startups when Nigeria is not even a highly tech economy. The truth of the matter is like raising a venture capital fund, not that it's easy, but there's already a template around doing that, right? But the truth of the matter is SMEs are not necessarily trying to raise equity funding, and even if they are, there isn't necessarily an established blueprint. Whilst with VC, there's been an established blueprint with the likes of Silicon Valley that has been built. So there's a template that investors can follow to be able to know how to do, like, they have the right, whether it's legal agreements or templates that can be used. Second is a lot of VC venture capital money is available in US dollars, not in naira. Um, because we have the likes like development finance institutions or HNIs abroad that are willing to provide money, but they want to provide it to venture capital funds because that's kind of what they're used to doing rather than SME funding. So that's kind of why the landscape is like this. And I hope and also want to be part of that in having more opportunities for SMEs to raise funding. In terms of where to go, I would say the easiest and lowest risk is like grants. So there are a few grants that are available. And when you think about grant sources, it could be banks that are trying to do SME funding. It could be actually universities actually have a few grants. It could be it could be
Private organizations as well sometimes do.
exactly private organizations that want to do to be able to support a particular cause as well. So whether it's even like World Bank, United Nations, all those like large institutions also provide grants. So I think grants is probably the easiest way because with getting debt from a traditional bank without collateral is very, very difficult. So being able to raise, whether it's from family and friends, if you have that ability to do, being able to raise through whether it's grants, if you have that ability to, if you do have collateral to put down, then getting from a bank. If the amount that you require is not that high, there are fintech organizations that actually provide loans, maybe up to 5 million. There's likes of money, there's fair money, there are organizations like that
Mhm.
that provide debt capital at a quicker rate. And then if you're able to turn around the debt capital very quickly, then you can get you can get it again. But I agree, it's not necessarily easy to raise capital as an SME that isn't necessarily tech enabled.
Yeah, thank you so much for that. Just to wrap up, one of my final questions is, as a VC and as someone that transitioned from consulting into VC, and obviously as a woman in business as well, what would you like your legacy to be?
Hmm, that's a very deep question. Legacy in life or in the professional space?
You say legacy generally, it can be in life, it can be in professional space.
Okay, so I think I'm very and it's something I'm very conscious on, right? Because you find you may interact with investors, and as someone that's raising money, it's not easy, right? Mentally it's exhausting, the economy is not the easiest. So for me, I think it's just treating with kindness, right? So even if we're not even making that investment, being kind to the founder and providing like valuable feedback that they can use to be able to do better or like just pivot or whatever it is. So I think for me it's just about being kind to people. I know it sounds like maybe probably what you're expecting, being kind to people, and also just living a life of purpose, right? So doing God's will on earth for me. So whatever He has asked me to do per time is always kind of my focus at that particular time, and being, I guess, known as somebody that like loved God, loved people, treated people well, and also, made an impact in the investment space. So supported businesses and founders, scaling from X to Y. I think is like a super, super critical thing I would like to be known for. Yeah.
Amazing. That's so
Yeah.
lovely.
Yeah.
Thank you. So just to wrap up, do you have any watchword or advice you want to give founders that are looking for funding?
I would say capital follows those who are doing well. And so, as much as you can, I wouldn't spend 1 year looking for funding if you don't have to. I understand some businesses actually need a lot of capital to get going. But if you
Mm,
can start with an MVP, focus on scaling that to be able to show traction, the money will come. So the
mm,
focus is not, oh my God, I must get investment, I must get investment, but rather I must build a business that will draw interest from people that want to generate capital. Because for us, like I have a mandate to do X number of deals a year. So I need to do those deals.
yeah.
But the money will chase you if you're actually already performing at a decent way. So finding innovative ways. Like one, I spoke to one founder and he didn't have as much capital to pay for marketing, right? And they're a B2C product. What they do is they give shirts out to a lot of um, kiosks in Lagos, or a lot of people that sell things on the road, basically, right? So whether they sell water, apples, they give them shirts, and those shirts advertise their brand. And so anybody that's driving on, I don't know, whether it's Alfred Rowani in Ikoyi or in Yaba or like, critical streets, they give them those shirts, and those shirts are their marketing tool. So they're literally marketing every single day or every other week because those people keep wearing those shirts. So just finding very like I know like Africa, you always hear things. Oh, Nigeria is tough. I want to leave. I want to, and people oftentimes even look at me so stupid for moving from Dubai to like Nigeria. They're like, that's where the money is at. But I moved for a purpose that I believe I'm called to do. And so if you believe you are called to be an entrepreneur and called to build a particular product in a particular space, you would get favor if you're, also like favor follows you. You also need to do your own part of it. So finding innovative ways around the current kind of macroeconomic situation, if you need to, and it's not something we necessarily advise founders to have like multiple business ventures because you want to be focused. But if you even need to be an employee before you can be an employer, it's
Yeah.
not a bad route to take because you will learn a lot from your employment. You'll be able to save money and you'll be able to invest that money to start off your business. So just being innovative about it, I think, would be my final words.
Thank you so much, Dolapo. Thank you so much for your time. Thank you for sharing your knowledge. We really appreciate. And hopefully, we get to share some founders with you or introduce some founders to you that are looking for funding that align with your thesis, your market creating innovation for non-consumption thesis. I really love it. It's so
Yeah,
concise and it really makes sense. So yeah,
thank
thank you so much for your time
you.
and yeah. Hopefully, looking forward to good things and amazing news from your camp. And
Thank
yeah, everyone that
you.
wants to connect with her, her name is Dolapo Morgan. She's on LinkedIn,
Yeah.
and it's better to connect with her on LinkedIn so that we keep it professional. So yeah,
Thanks everyone for being a part of this. It's been
yeah,
very lovely, and thanks to Halis,
Halisi,
Halisi Consults.
yeah.
Yes, thanks for having me.
All right, no worries. All right, bye bye.
Bye.